Good morning, everybody. This is the live market open for Monday, March 14th. We're the Ides of March. As the Roman said, I'm Yohay Elam, a Forex Crunch and Market Movers podcast, doing the show as usual for FX Tweet. We'll cover recent developments, talk, of course, about the ECB, but so many other things, charts and levels as usual. Of course, your questions there, which charts you want to see, and the next 24 hours, which have one big event. And of course, any other questions you wish to ask, I'm here. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Good morning, everybody. Okay, so let's talk about the market mood in general. It remains relatively positive. We are seeing some kind of a correction this morning, some kind of a strengthening of the US dollar, if you wish, and the yen, some kind of weakening of stocks, of falling oil, but in general, oil prices, stocks, commodity currencies, everything is elevated. Everything shows a good mood. ECB, we still have echoes from that. I'll talk about that more in detail later on, but ECB introduced a huge package, more QE than expected, a cut in the main lending rate, various easing moves, including 4 TLTROs. Basically, the ECB is going to pay banks to lend, for them to lend to the real economy. But when he said there are no further rates, we had this move backfiring and pushing the euro higher. But the discussions are still going on in markets about what this move actually means. We had mixed Chinese figures over the weekend. Maybe this helps a small correction now. We had a fall, well, worse than expected industrial output and retail sales, but better than expected investment. Okay. Angela Merkel faced regional elections. Over the weekend, this was seen as a test around her immigration policies, and if this was indeed a test, she lost it because the anti-Euro, anti-immigration right-wing AfD party made significant gains in 2 out of 3 states, were regional elections, and so it was seen as a backlash against Europe's strongest politician. In the United States, primaries became violent. We had a rally in Chicago of Donald Trump canceled, and various candidates blaming each other. It doesn't look so good. It doesn't have an impact on markets yet. Of course, there's tension towards the Bank of Japan's meeting tonight, which is more important than the regular meetings, and of course the Fed on Wednesday. And there were tragic blasts in Ankara and in Ivory Coast, in Abidjan, over the weekend. No market impact, perhaps, but well, perhaps this also forms part of the slightly negative market mood we're seeing today. Okay, before we talk about, well, let's talk more about the data. Chinese industrial output missed with 5.4, investment beat with 10.2. On Friday, we had Canadian employment disappointing, but it only hurt the Canadian dollar a bit. Okay, we had unemployment rise to 7.3, a fall in employment. The Canadian dollar was hit, but it didn't last too long because commodity currencies were on the move. We had on Thursday jobless claims in the United States beat expectations with 259, and import prices also coming out better than expected. But of course, it's not top tier figures. We do have top tier figures starting tomorrow in the US. Okay, let's talk about some charts. Euro dollar. Okay, this is a dramatic Draghi move. This is what happened. This fall here began at 1:45 GMT on Thursday because the ECB introduced a huge amount of measures, and it fell all the way here. And then when Draghi talked about no need to further reduce rates, we had the impressive turnaround, which went all the way to this line of 112.15, which is a veteran line of resistance and support. I marked it now as the new level of resistance. We did fall, well, not all the way to the previous line of 110.70, but we're somewhere over there. Good morning, everybody. Currently 111.34. Again, a small slide this morning. Nothing very significant. The euro still remains on high ground if we compare. Last week we had ranges around well, you had this low range here, and anyway, 110.70 worked as resistance. So, well, we're back to levels last seen in mid-February. We went 1 month back in a relatively higher range on euro dollar. As I said, the ECB has a lot to do with it, but markets are still digesting the events, okay? Morning, everybody. Pound dollar continues its recovery. We can see here at 143.70. We had this line before end of 143.64, 65. Anyway, resistance at 144.40. The pound continued recovering, mostly enjoying the weakness of the US dollar more than anything else. Nothing really happy coming out of the UK recently. Still tension towards the referendum. And this week the focus is on the government's budget. Okay, dollar yen, perhaps the only currency that doesn't really run against the US dollar too much. And now it's strengthening. It's more of a risk-off sentiment. 113.76, sort of in the higher side of the range seen recently. So in general, the US dollar is stronger against the yen, but perhaps a bit less this morning, more of a risk-off. Anyway, support at 112.80, resistance at 114, 114.55, okay? Dollar CAD, the Canadian dollar, continued its run. Once again, this morning, we're seeing the US dollar trying to make an attempt to recover, licking its wounds, if you wish. We went to a new low on Friday, 131.67. Remember, this came in spite of bad employment figures in Canada. So the initial reaction to the bad figures was a rise in dollar CAD, a weaker Canadian dollar, but it reversed quite quickly. You can see it right here. It didn't last too long, and then we fell lower. Now we're beginning to move higher. Well, oil prices are sliding this morning, again from high levels. So 132.70 is the current level. I would say 131.61. Yeah, 131.70 is support and 133 is resistance. Aussie dollar again reached new highs on Friday and even topped them this morning. Early in the Asian session, it did begin with a small gap lower. Currently 75.32, struggling with this line. The high was seen. Let's move the line here. Almost at 76. All in all, the Australian dollar is enjoying happy days, good economic figures, and over the weekend, not so terrible Chinese figures, mixed ones. Now we're seeing some kind of a correction, which I'm not sure at this moment if it'll turn into a full reversal. At least the Australian dollar among its various peers is the strongest one, enjoying good data, while New Zealand suffered a rate cut and Canada weak employment figures. Okay. Kiwi dollar 67.22. The recovery continues. This is the big fall seen last week because of the rate cut. Okay, surprising rate cut from New Zealand from 2.5 to 2.25. Later this evening, we have a speech by Graham Wheeler, the governor of the RBNZ. Anyway, 67.22. The high is 68. Resistance 68.20 and support at 65.50. Okay. Dollar Swiss currently on lower levels because of the weaker, rising just a bit because the dollar is recovering this morning, but we fell to lower ground. You can see here how dollar Swiss is sort of an inverse picture of euro dollar, okay, because of the correlation with the euro Swiss. I suspect that the Swiss National Bank, in the immediate aftermath of the ECB easing, also intervened to weaken the franc. Of course, the bigger recovery for the euro came because of Draghi, not because of the intervention. Okay. Anyway, 98, the round number is the level to watch, and 98.90 or 99 is resistance. Okay. Euro Swiss. You can see how the moves are relatively limited here. 109.70 is the current level. I would say that the Swiss National Bank would prefer seeing it above 110. Anyway, we have a rate decision from Switzerland, something that happens only 3 months. We have it on Thursday, if I'm not mistaken, later this week. If we'll have time, we'll cover the events coming up this week. And support maybe here at 109.40. All right. Euro pound, well, this line becomes relevant once again, 77.40. We already went to higher ground here at 78.50. Very nice technical behavior from this cross. Okay, let's see if we fall under 77.50. If the euro weakens, the pound strengthens. I'm not really sure about that at all. Anyway, these are the lines to watch: 76.60, 77.40, 78.50, and 79.30. Euro yen, here we also had this drama, the fall of the euro that lasted only 1 hour, and then the rise, currently 126.65. In general, a stronger euro, weaker yen. Now we're seeing a small reversal of this, but as you can see, the general, I mean, we had a stronger euro on Thursday, so here we are. I would say 128 is the next line of resistance, with 125.50 working as support. Pound yen, the sort of good mood in markets weakened the yen, helped the pound recover. 163.80 works nicely as resistance. Support at 162.30, followed by 160 and 158.50. Further resistance at 166. Okay, and let's look at oil prices in the regular morning round. Yes, now they're falling, but in general, they had an excellent few weeks. The low was here in mid-February, the past month. Oil prices are generally higher. The low is $26, now we're at 38. That's over 40%, okay? We already reached 39, so we already were at 50% off the lows. There were many reports last week saying that oil prices have bottomed out. Morgan Stanley said so. The Energy Information Association, or whatever they're called, also said something along these lines. So that's where we are. Okay. Of course, you're welcome to ask any questions about any currency pairs, major, minors, crosses, whatever you wish. But let's continue with events coming up today, and perhaps talk a bit more about the ECB and more about other events next week. This week. So today it's a relatively light day. It's in a big contrast to what we have later this week. We have Eurozone industrial output at 10 GMT. This is the Forex. This is a Forex Crunch website and the FX Street calendar. See, powered by FX Street. Anyway, industrial output in the Eurozone is expected to rise 0.9. That's thanks to a nice rise in German industrial output that we've seen last week. I would say a second or third tier figure today. Anyway, last time we had a drop of 1.3, so a bounce this time. It's good, will be good news, but not too exciting. Also, the month-over-month figure is expected to rise 1.5. Yeah. Anyway, that's one event for this morning, more or less the only event. At 7 GMT, 8 here in Central European time, we have a speech by Graham Wheeler. And tomorrow, which means overnight, we have a few figures from Australia, motor sales, the RBA meeting minutes. In the last meeting, they didn't do anything. They were steady as she goes from the Reserve Bank of Australia. They had good reasons not to be dovish because the economy is doing quite well. So let's see if the minutes tell us something we don't know. Basically, the message is the Australian economy is strong and China is slowing down, but it's going to be all right. No worries, mate. Was sort of the sentiment. But the bigger event of the night is the Japanese rate decision. And this one is an important one for various reasons. Let me show myself to the camera and talk a bit about the rate decision in Japan. First of all, how do we know it's important? Because also government officials will attend it, not only the Bank of Japan. Secondly, they have a special guest, Nobel laureate Joseph Stiglitz. Okay, he'll also be there. He is a known dove, if you wish, Keynesian, one that supports doing more to help the economy, not a hawk. So there is a higher chance of more action by the Bank of Japan. Okay. In addition, we had Japan falling into contraction. Not a full recession, but the economy did contract in the fourth quarter. That also implies some action. And also what we had from the ECB. I'm not talking about the backfiring, of the rise of the euro, but the ECB introduced so many measures, went so dovish, went further into negative ground, introduced more QE. Why shouldn't the Bank of Japan follow? Why shouldn't it act to weaken the yen? So this time we might have some action from the Bank of Japan. What the hour I see here on the chart is 3 GMT, okay? But it isn't always this way because the Bank of Japan finishes its meeting and makes its announcement when it's finished. There's no set time. The longer the meeting lasts, if you're staying awake overnight, or if you're trading from Australia, or from the US or wherever in the world, and you are following the Bank of Japan's decision, the longer it lasts, the more action it means, okay? That's what we usually had in the past. We do have the press conference by the Bank of Japan's Governor Kuroda is scheduled for 6:30 GMT. Okay, that's a set time. That will happen on time. I mean, that's what always happens. But the exact timing of the statement is quite unknown, okay? So somewhere at least, well, not before 3 GMT, but perhaps later, okay? So once again, remember what happened last time with the Bank of Japan? It didn't last too long. Not that short like the ECB, but they did talk about intervening when dollar yen fell to 116. It went all the way to 118. Then they introduced, for the first time, a negative deposit rate, okay? Multi-tiered, but not something that was, they didn't go too far with that, but it was still quite significant. And what we've seen afterwards, a few days afterwards, well, the immediate reaction was dollar yen went all the way to 121.50, but then began falling down, and eventually it went to lower ground. Now it's under 114 at the moment, right? So they did intervene. We have a double bottom there at 111. Anyway, what I wanted to say is that even if they do introduce a lot of monetary stimulus, it might not work for too long, okay? But they do have, it's more legitimate now for them to act after the ECB did, and because of the fear of a recession. And what we might also have, we've seen that in the past in Japan, is that we have a joint statement also with the government, or a parallel statement. It means we have some action from the Bank of Japan and some action from the government as well. We had that in October 2014 when the government allowed pension funds to invest in the stock market, and we had more QE introduced by the Bank of Japan. This sort of 1-2 punch then sent dollar yen was under 110. It sent it all the way to 111, and this pair continued rising well above 120 eventually. So we might have this kind of, because we have also government officials attending this meeting, we might have them join forces, okay? So we might, my expectations are high, but again, we've had the disappointments, or we had high expectations being met or exceeded by the ECB, and then things backfiring, okay? Anyway, that's my preview for the Bank of Japan. I think they could act on both QE and negative rates. Good morning. Any probability on euro dollar long at 112? I don't know about probabilities. I know the pair is rising. Well, correcting now in range. 112.15 is my line of resistance. 112.50 very close above that, and 130 and 113.75 is strong resistance. This was a veteran line already in November 2003. Yes, 2003. Nearly, well, more than 12 years ago, almost 13, and also worked in the past in 2015 and also now, okay? So this is a very strong line, 113.75, followed by 114.60, 115. On the downside, 110.70 for me is still really strong support. Okay, good morning, everybody. If Draghi wanted to weaken the euro, why didn't he cut the rate and spend more? Well, he did a lot. Let's talk about the ECB for a moment. Okay, this is what the ECB did on Thursday. I hope you all watched our live coverage. First of all, he did cut the main lending rate, something that nobody talked about. It's the first cut since September 2014. Okay, it was 0.05. He cut it to around 0. The deposit rate was cut to minus 40 basis points. Okay, that was as expected, not more, from minus 30 to minus 40. The big bazooka that he shot was that the QE program was enlarged by 20 billion euros a month to 80 billion, 33% raise in the monthly bond buys. Now, what will the ECB buy? Of course, more government bonds, because the limit is now lower, minus 40 basis points. They didn't scrap the limit, but the limit is now lower for the yields. Secondly, they changed the issuer rule. That means the ECB can now buy up to 50% of any specific bond, not only 33%. And in addition, they're now going to buy also corporate bonds, or as they said it, non-financial investment grade bonds. Okay. Anyway, corporate bonds of hopefully more serious corporations, not junk bonds. Anyway, and they also introduced 4 new TLTROs. What are TLTROs? They are targeted loans. Basically, the money is lent from the ECB to a bank on the condition that this bank lends the money to the real economy. Now, with the current rates, and according to what Draghi explained, it's going to be with a negative rate. That means the ECB pays banks money to lend to the real economy. That's a lot. All these things, especially QE, are huge events. It's more than was expected. Why did things backfire? Why did we have this reaction? The euro dollar dropped from 109.70 to a triple bottom now at 108.20. Okay, and then he just said no need for further cuts. That was a planned statement. Okay, that was part of the statement. That was not a mistake he made in a response to a question in the press conference. Okay, so we had a full turnaround and went well. Markets are just cruel. They said, okay, is the ECB now finished shooting all its tools? Doesn't it have more tools in the shed? Does it have no more power left? Is it weak, or things like that? So things totally reversed. Now, they not only reversed on euro dollar, they also reversed on bonds and stocks and things like that. Yeah, he did cut the rates and spend more. He also did say in the statement what they already say for around 2 years or so, that rates will stay at these levels or lower for a long time. That means, and he said at this point, there's no need to cut rates further. So it's not that he totally shut the door and said, we give up. That's not what he said. Here are a few reasons for, we talked about this in the Market Movers podcast, my associate Lior and myself. He offered a few explanations for why Draghi said that he will not cut rates further. Okay, it could be German pressure to smooth the extreme easing. Okay, they did a lot of steps, a huge package, and now they don't want to go too far. They want to sort of say, okay, this is enough. Some kind of, like we had with the previous events, with the Fed, for example, we had a sweetener. We said, okay, we're raising rates, but don't worry, we'll do it very, very gradually. We are worried about inflation. So this is the other way around. Okay, we did a lot, but don't worry, we ended it, at least for now. Okay. Another thing that could be as a gesture for banks. With negative rates, banks' profits are in danger. Okay, so it could be a hint that don't worry, we're behind you, keeping your back. The commercial banks and some banks are not in a really great situation in Europe. Okay. In addition, this could be leaving some more tools in the shed. That sounds contradictory, but if things do get worse in regarding inflation, and the ECB will want to do more, they can say, okay, you know what? We changed our mind. The door is now open for cutting rates. This is different than what we said in March 2015. So they could always change their mind, and that would be a shift to the dovish side, and this could hurt the euro. Okay. And in addition, they have upped the ante, the rhetoric regarding what they can do and what government should do. In a recent testimony in the European Parliament, Draghi said that basically that the ECB is the only game in town, and that governments with fiscal space should basically do more. Okay, so with saying, listen, we did a lot and that's enough for now, or that's enough in general, he tells governments, now it's your turn. Okay, so these are 4 explanations for why Draghi did what he did. Of course, he was disappointed because he wanted higher stocks, higher bonds, that means lower yields, and of course a weaker exchange rate for the euro. I think it isn't over. I think I still suspect that markets at some point will understand that the ECB did a lot. First of all, that the ECB did a lot, and this will sink in. When more money is poured into the system, this money will flow out of the Eurozone and weaken the euro. 80 billion is much more than 60 billion, and a deeper negative rate is more significant. Secondly, we have the Fed decision this week. And for euro dollar, this means, okay, maybe the ECB, maybe the Fed, of course, is not expected to raise rates this week, but the Fed is still on a tightening path. We'll get a reminder of that. We'll hear from the Fed that they probably still expect to raise rates this year. And this is still a big contradiction, a big divergence from the path that the ECB has. Okay, so I'm not sure, the fat lady sang, I'm not sure we've seen the sort of, I believe that the euro could resume its falls. Not something big, not parity, but back to the lower range is something I would not discard, I would not rule out. Okay, let's talk about other stuff. Yeah, okay. Let's see if we have no questions at this point. Let's talk about other events we have this week. It's going to be a busy week, not today. Well, today we have the ECB echoes, and we talked about that quite a lot. Tuesday we had during the night we have the decision of the Bank of Japan. We talked about that. More action is expected. Now with Draghi doing his part, they can do more. Tomorrow we have top tier event in the United States, retail sales. Last time, the figures for January, they were finally better than expected after many months of disappointments. Let's see what we get this time. Expectations are low. We also have producer price index, the PPI in the United States. We have, for those of you trading the Kiwi, we have the bi-weekly auction of milk prices. So a significant day tomorrow, but much more important on Wednesday. First of all, we have the UK employment figures and the budget release. Now, George Osborne, the Chancellor of the Exchequer, is expected to announce some kind of austerity. He already gave us some hints in weekend commentary in one of the newspapers in the UK. Worsening situation, cocktail of dangers, whatever he said. Anyway, it could be unpleasant, and most importantly, we could have a downgrade of forecasts by the British government. Okay, so let's see how bad that comes out. We have US inflation, CPI, of course, top tier figure. Inflation has been improving in the United States, so let's see if it continues this path. We also have housing figures. Hopefully they will not contradict each other. Oil inventories, which always impact the mood. We finally began seeing some cut in production in the United States. And we have the Fed decision on Wednesday, the full shebang, the press conference by Yellen, the first press conference after rate decision since the rate hike in December, and an updated dot plot. In December, they showed us that they see 4 rate hikes in 2016. Of course, no rate hike is expected now, and this, of course, lowers the chance, if not eliminates the chance of 4 rate hikes. Anyway, markets are expecting only 1 at the moment. They will probably say 2 or 3 in their dot plot. They will probably gradually climb off the tree. Let's see what happens. Of course, we'll do a full preview of that on Wednesday and in the aftermath on Thursday. For those of you trading the Kiwi, we have also GDP on Wednesday. On Thursday, of course, echoes from the Fed decision. We have also Australian employment figures. Let's see if the situation remains positive. Rate decision from Switzerland. They have deep negative rates. Let's see if they go further or they threaten more intervention or things like that. More importantly, we have a rate decision in the United Kingdom. No changes expected, but the tone of the meeting minutes will be important. Let's see if they become even more dovish, all right, or if they warn about a Brexit or anything political. We know that they don't favor a Brexit. Anyway, and on Friday, we have Canadian inflation and retail sales, sort of double feature for those trading the loonie. And last but not least, something that was supposed to be last week, consumer sentiment in the United States to set the final tone, sort of the first significant release after the Fed. We have very important figures before the Fed. So it's quite a busy week. It's the Ides of March. Next week is not a full week because we have the Easter Good Friday next week. So this is a very significant week. 4 rate decisions, echoes from the ECB, and other special events such as UK budget release. And also this specific rate decision in Japan is one of the most important ones. Okay, any questions? Let's look again at the charts. I see, okay. Well, not too far, but still over 30 pips to the downside on euro dollar this morning. So we are seeing some kind of attempt by the US dollar to make some kind of a recovery. Okay. Also here, yeah, sort of more of a risk-off morning. Okay. I'm not sure if it's a correction. At the moment, I suspect it's a correction, but it might be also a change of course. Aussie dollar is falling from the highs. That's clearly a risk-off move. Questions here. Did Mario drink alone this weekend? No, he was here crying on my shoulder. I'm sure he was frustrated, but perhaps after he was hurt last time in December, I'm not sure he was that depressed this time, okay? And I'm not sure it's over either. So he might... Eventually, the ECB did a lot. And not only... Contrary to December, they did beat expectations, okay? In December, they did a lot. They cut the interest rate, the negative deposit rate, by 10 basis points from -20 to -30, and told us that they'll reinvest proceeds of QE, but it was less than expected. This time, they beat expectations, undoubtedly. Yeah. Yeah, I'll have a fresh, dry shirt for him to cry, and lots of napkins as well. Anyway, currently the mood is a bit worse with oil prices, WTI sort of getting closer to $38. Have any more questions? Let's look at oil, also Brent. Brent is sliding towards $40 as well. Anyway, 110.70 is strong support on euro dollar. 112.15 is resistance. Pairs to watch today: yen, and yen, because it's an important rate decision. Remember, the Bank of Japan meets every they meet 14 times a year, means on average more than once a month. Okay. But this one is important because of everything I mentioned. After Draghi, they can do more. After the GDP figures, they can do more. And they have a special guest there, Joseph Stiglitz. Everything's ready for them to act. Let's see if we have any kind of movement on the yen, dollar yen, and yen crosses before the event. And another pair to watch is euro dollar, because as I said, I think it's still not over for the ECB reaction. Anyway, 110.70 to 112.15 is the range. And I still expect some kind of backfire over there. Okay. Any more questions? Let's look at the probability for a rate hike in the US. Okay, for March, which is, well, 2 days from now, what's expected is no change and even a small chance of a rate cut, not a hike. Moving forward to April, no change, and maybe in July we'll have, well, basically it's also balanced, but there's already a higher chance of a rate hike. And one rate hike is priced in for September. And the next one only in February, I would say, according to the bond markets. And we'll see how it shifts after the Fed. Chances did go up, I think. Anyway, I am expecting some kind of a more hawkish tone from the Fed, or at least something that will contrast the dovishness of the ECB, and of course what we'll have tonight from the Bank of Japan. Bank of Japan trying to weaken the yen. Can we expect dollar yen? Expect them to fail. I don't know. Look, 112.20 is support. 111. See, this is double bottom here. 112.20, and much stronger support at the round level of 111. Okay. Resistance 114.55 and 116, which was the previous line in the sand. Central banks have less power. Everybody's dovish. It's hard to surprise markets, so they might fail. They can try to weaken the yen and fail and send it to 111, and there they might already directly intervene in markets, or they can try to, and if they succeed, maybe towards 116, but they'll really have to do a lot in order to beat market expectations, in order to do something that, I mean, everybody's so dovish, everybody's providing monetary stimulus that it's really hard to, seems like markets have already are in the mood of been there, done that. Okay, more questions? Anyway, yeah, here we are on euro dollar, dollar yen. In general, this morning, a trend of US dollar strength, yen strength, a correction to the moves seen on Thursday and Friday. Okay. I think, yeah, I think it's time we begin the wrap up for today, right? So this is the wrap up for the live market open for Monday, March 14th. As the Romans said, we are now at the Ides of March. What's going on in markets? In general, they were positive with strong performances by stocks, commodities, and commodity currencies, and also the euro with the big backfire. But this morning, things are looking a bit worse with US dollar and the Japanese yen gaining some ground, correcting some of the losses. We had mixed Chinese figures over the weekend, worse industrial output and better investment, so it wasn't all bad. Angela Merkel received a political blow by losing regional elections. It showed that not many Germans don't agree with her policy on immigration. US primaries became violent. This week we have the second Super Tuesday. Let's see how that evolves. And there's tension towards the Bank of Japan and the Fed, which is of course more relevant than political news at this moment. Figures that we had are here. Well, let's move to the figures we have today. Eurozone industrial output due at 10. It's expected to be better than expected. better than last month. A rise in industrial output, not that important. We have a speech by Wheeler of the RBNZ at 7 GMT. This could be significant for the Kiwi. The RBA meeting minutes at 12:30. Last time the decision was everything's all right. And let's see if they changed their mood. If the minutes show something new. The big event for the next 24 hours is the Japanese rate decision. It's attended by some government officials and attended by Joseph Stiglitz, Nobel laureate. And a lot of dovishness is expected, perhaps more QE, a deeper negative deposit rate, more monetary, and perhaps some fiscal stimulus. Perhaps the government will announce something that will boost the Japanese economy and perhaps weaken the yen. But remember, the power of central banks is becoming more and more limited. Everybody's dovish. To make a big dovish surprise is becoming harder. The bar is higher. Okay. Anyway, dollar yen currently 113.73. We're starting with this pair. Today in the wrap up, 114, 114.55, and 116 are lines of resistance. Support 113.10, 112.20, and 111 is the line in the sand to the downside. Let's go back to the top. We still have echoes from the ECB's backfire. The ECB announced 20 billion more in QE, more than expected. They cut the main lending rate, a total surprise, to 0%. Lowered the negative deposit rate as expected from -30 to -40. Announced 4 new TLTROs, lending schemes, which means the ECB pays the banks for them to lend out money. And but that wasn't enough because Draghi said in the statement that rates will not fall for now at least, and this really hurt this made this big backfire with euro-dollar falling at the beginning from 109.70 to 108.20. Look, it already turns into a triple bottom, and from there everything backfired and we reached a high of 112.15. Currently a small slide in the range. 110.70, 109.60 are levels to watch on the downside. Resistance 112.15 and 113.75. It was a huge event on Thursday and it still has echoes. I'm not sure the reaction is over. Okay, pound dollar awaiting news from the government on the rate decision this week, off the highs of 144.40. 143.60 is the current level. Some support at 142.30. Sorry, and also, dollar again. We talked about that. Dollar CAD. The Canadian dollar showed how strong it is on Friday, managing to gain ground despite weak employment figures in Canada. We had unemployment there rise from 7.2 to 7.3. Anyway, 133 and 133.70 are lines of resistance and support at 131.70. Lower oil prices weigh on the CAD, on the Canadian dollar, and push dollar CAD higher. Aussie dollar, one of the big winners of last week, or the big winner, went all the way to almost 76. Now we're sliding this sort of correction risk-off sentiment. 75.23 is the current level. The round number of 75 is worth watching. Kiwi dollar, despite a surprising rate cut last week, it managed to gradually recover. Now sliding once again. 67 is support, 68.20 resistance, and 65.50 further support. All in all, we have a very busy week. It was busy enough last week with the ECB. ECB echoes are still with us. And this week we have 4 rate decisions starting from the Bank of Japan tonight. The Fed decision on Wednesday, very important one, even though no change is expected. Also decisions from Switzerland and from the UK, and lots more other events coming this week. So we have, before we head off, we see another question. Dollar yen or euro yen for bigger mover today? It's hard to say. I would focus, if you're trading the Bank of Japan, focus on dollar yen. It's the best mover. But because the euro is still influenced by the ECB. and dollar yen would be a better isolation of the yen. Okay, I hope this answers the question. Anyway, thank you very much, everybody, for coming. I wish everybody a safe and successful day in the markets. Action is still going on. Not only euro dollar and dollar yen, but other currencies have quite a few important figures this week. Basically, from every currency we cover regularly. So it's going to be very exciting. And that's it. So tomorrow we'll be here already with the results of the Bank of Japan. Let's see if they pull out another Draghi, introduce lots of stimulus only to see the yen strengthen, or we'll have a successful decision or not. Let's see. Yeah. Didn't you do the wrap up for the week? No, I didn't have a show on Friday, so that's why I mentioned some events on Thursday and Friday as well. But anyway, this week I'm here all week. As usual, everything is as normal. And yeah, I'll be here tomorrow with the Bank of Japan and further reactions in the euro, more about the Fed and everything, and your questions, of course. So that's it for today. Thank you and bye-bye.